Okay, so our next presenter is speaking on how to build wealth and create consistent income with stocks and options without quitting your job or taking big risks. Fadi Habib is the founder and CEO of Legacy Wealth Builder Academy, where he mentors busy professionals to build wealth and create predictable income through stocks and options investing without quitting their jobs or taking big risks. With over 25 years of corporate leadership experience in operations and strategy at global companies like Schlumberger, Celestica, and Sun Life, Fadi brings a unique blend of analytical precision and real-world investing success. His growth system has helped professionals across North America and Middle East achieve financial clarity, confidence, and freedom. And today he's here to share how you can start your own journey to financial independence. Big round of applause for Fadi.
Hello, hello. Hi, everybody. How are you doing? I have mine.
Good.
Cool. I do have a confession to make. My real estate is not cash flowing like it was 5-6 years ago. Anybody has this problem? Anybody has this problem? Cash flow is a problem whether you're a real estate investor or not. So how would you like another way of making cash flow? That's why I called it the digital Fourplex, without really a big risk, without dealing with the tenants. By the way, I'm a real estate investor, has always been for the last 30 years. I'm not telling you not to do real estate. For me, anybody who is responsible need to be in 3 different areas to make money: real estate, stocks, and owning a business, okay? So we just talk about the second dimension here. So how would you like to make a lot of cash flow without the tenant, without quitting your job, and look at this. Chinese characters, good. Okay, only 10 minutes a day. So the promise of today is to show you how to do 24 to 36% plus in a way that is risk controlled, in a way that it only takes 10 minutes a day without the added risk, because there's a tendency, even with real estate investors, with sophisticated investors, when they deal with the stock market, it's a big casino. They forget about everything that they learned about doing their diligence, and they just go do gamble. So, a little bit about me. I am a professor. I've been 25 years in corporate different jobs: oil field, manufacturing, high tech, BlackBerry, insurance. I'm a professor as well for the last 6 years, taught at Laurier, Conestoga College, Algoma University. I also am an investor all my life. So that was kind of my part-time job after my real job in the morning. And right now I'm enjoying a lot of freedom, mainly time and location freedom. I can do whatever I want from anywhere in the world. So last year, for example, actually this year, I've been 2 months in Egypt doing everything that I'm doing because I designed my life to be online. And I'm also the creator of the growth system, which I will talk about today. So with real estate, there's some inherent problems we have. Number one, we have high interest rates, and it's really eroding our cash flow. Do you feel that? Anybody feels that? Second is that there's a lot of high down payments that we need to deal with. Also, the money is stuck in the property. If I need to get money out, I have to apply for refinance. I can get a yes or a no. The last thing as well is that there's a lot of tenant repair. So there's a lot of value, there's a lot of different advantages of using what I'm about to tell you. There's so many. Take a picture. I'm just going to choose 1 or 2 to talk about. Number one, it only takes 10 minutes a day. Number two, it is liquid. It's only 48 hours to get money in or out into your brokerage account. You can start with 10K. You cannot have a down payment of 10K when you're doing real estate. There's also great returns in a risk-averse way, because what's more important than ROI is protecting your capital. People who go into the stock market with this priority flipped, if you're just looking at ROI, you will definitely lose money. So number one, protect your capital, because it's very volatile. It's different beast and animal compared to real estate. You protect your capital, that's number 1 and 2 and 3. Number 4, you get the best ROI knowing that 1, 2, and 3 are taken care of. If you have this flip, and that's why 15 years ago, I thought that anybody who puts their money into the stock market is a gambler, is an irresponsible real estate investor till I was converted. So number one, don't take a lot of risk. Number two, get the best ROI. Okay. Stocks and options and real estate are complementary. It's not either or. Real estate has a long-term opportunity for appreciation as well as strategic leverage. I will always go to a bank to get a mortgage to take a real estate deal. However, on the stock market, because it's very volatile, margin is prohibited. Do not use margin. It is very risky to use margin. Okay? But also, it gives excellent way to give cash flow, which I will show you. Excellent way to get cash flow, as well as very liquid. Different animal, it's good to be in both. So what is an option? Okay, so I'm going to pretend that Crystal here is my friend. Okay, Crystal, are you my friend? Yeah. Okay, good. So I am this guy here, and Crystal is this lady here. Okay, we are close friends. Anytime, I sometimes get a lot of business ideas, and I need someone to talk to pitch these ideas to, and they get me their feedback. Okay, so I do that with Crystal all the time. We're pretending here. Okay, Crystal? So Crystal, anytime I'm going to call her, she's going to pick up the phone and talk to me. But I wanted to formalize it a little bit, okay? So in this example here, I'm going to agree with Crystal that anytime in the next month, I will get some ideas, I will call Crystal, and Crystal will pick up the call and talk to me about this business idea, okay? And for that, I'm going to give Crystal $10. Is that a good deal, Crystal? I'm going to give you $10.
Seriously?
No, take it. I'm going to give you $10 so that for the right of the next month, I'm going to call her anytime I want. Is that okay? Is that a good deal? Yes. Say yes. Thank you. So in this example, okay, it's supposed to say here, buyer. Okay? I'm a person A. I'm the buyer. I don't know about the characters. But anyway, I am person A. I'm the buyer of the option. I bought the option of calling Crystal in the next month. Crystal here is the seller of the option. And because she sold me that option, I gave her $10. Okay? So I have the right to call her in the next month. Do I have to call her? No. It's just my option to call her. Okay? So in the next month, I will have the right to call her. I might call her once, twice. I might not call her at all. But end of day, I have the right to exercise the option of calling her. Okay? At the end of the month, the option expires. She is under no obligation to take my call after a month. Okay? And if you look at Crystal here, Crystal is doing this a lot. So she's bagging $10 each and every month because she does that with me every month. So that's a simple way of looking at an option. But how do actually we can make money from this? So a little bit of terminology here. There's something called the option premium. That's the $10. I paid her premium because she sold me the option of calling her. I'm the buyer of the option, and I have the right to call Crystal. She's the seller. She has the obligation to take my call. So let's give a real example of, this is actually a real example with real money, okay? So everybody knows about Meta or Facebook, okay? Everybody knows about Meta? Meta right now, do you know what is the price of Meta right now? $6.75, beautiful, good. Meta right now is at $675, okay? I am here not a very sophisticated investor. Crystal is. She knows about stocks a lot. So I am so afraid that the Meta at $6.75 will go down to $6.50. I just can't handle it. On the other side, Crystal knows what she's talking about. She knows that the intrinsic value of Meta, the real value of Meta, is north of $800. Which means Meta at $6.75 is undervalued or overvalued? Undervalued. So it's actually, she wants to buy it at $6.75. Okay? That's the starting point. She knows about Meta. Meta is a really good stock, pumping a lot of profit. And she wants to buy it at $6.75. Okay? I'm, on the other hand, don't know anything about that. The normal behavior of me, the typical person in the stock market, is that they don't know anything. They don't know about the value of it. They don't understand the market behavior. And they usually buy at the top and sell at the bottom. That's if you left yourself, the psychology of the person will do this. So let's start from here. I went to Crystal. I told her, Crystal, I heard that you want to buy Meta. She said yes. I told her, okay, cool. So will you agree with me, I'm going to give you some money as a premium. It's not $10 anymore, it's much more. But in the next month, if Meta went down below 650, will you buy it from me? And Crystal said, of course, I want to buy it at 675 anyway. Now if it goes to 650, I will buy it at a more discounted price. I know the value is 800. So that's good. By the way, for this deal, Crystal would take $1,800 to agree to buy, not to buy it, to agree to buy it for the next month. Okay, that's real numbers, by the way. So for the next month, if Meta went down below 650, then she has to buy it. But I want to tell you that 80% of the time, statistically, it will not do that. She will not have to do anything. She will just collect 1,800, and she will do that next month as well. 80% of the time, this will not happen. So let's just talk about the ROI of this. This is called the option chain, by the way. So you will see that this is Meta. It says Meta on the top. The price of Meta right now is 675. This is called the strike price. It's at 650, and these two numbers here are the bid and ask of how much premium she will get. It's about $18. So let's just calculate the ROI. $18 divided by the 650, this is how much she will need to buy it if she bought it. She will not need to buy it most of the time. 18 divided by 650 is 2.7 for this transaction, and this transaction is only 28 days. Annualized is 35%. Okay, this is the power of how powerful options are. I want to tell you that this is a typical, I didn't try to find something with higher ROI. There's a lot of companies that will give much more higher ROI, and it is advisable not to go with them because we only do that on really good, powerful stocks. So you can't do this on any stock because we're in the insurance business of insuring good stocks. You can insure bad stocks, you'll get much more money, but you will pay the price. So part of the learning here is to understand what is a good stock. So again, very quickly, why are we doing this? Because number one, it takes 10 minutes a day. Number two, it is liquid. Excellent way to do cash flow. And you can do it with mitigated risk. You do not need to put your capital at a lot of risk. A little bit of numbers. If you have $100,000 with 24%, that is typical. In this example, it was 35. With 24%, you double your money every 3 years. You 10x it every 10 years. Most of the people do it, and I do it mainly for income or cash flow because it helps me with that a lot. $100,000, you can expect to get about $24,000 a year, about 2K. Is it 2K each and every month? No, it's the average, okay? It's not like it's giving dividends, but it's on average, this is totally doable, okay? So this is the growth system, and it has many elements. Number one, the strategy. People think that if they know a strategy, they can win in the stock market. It's not true. It's not true. Strategy is only 10%. 30% is understanding how other people lost money so that it's not you. So risk mitigation is very important because there's a lot of things that you need to do and learn so that you don't lose money in the stock game. Third thing is psychology. We're all having these two major emotions, fear and greed. Fear and greed. We need healthy dose of both. If you're fearful, you will do nothing. You will just get stuck in analysis paralysis. If you're too greedy, you will do stuff that is not smart in terms of putting a lot of risk. So you need all that. And one of the major elements of my program as well is that you do not put your money when you're learning. You have to start with a paper trading account. A paper trading account is an account whereby everything is real, but they give you $1 million monopoly money. And this is where you train. This is where you make mistakes. And this is where you prove to yourself that you can make money in paper trading. And if you make money in paper trading, then you can graduate yourself by putting some money. But if you don't make money in paper trading, it means whoever is teaching you doesn't know what they're saying, or you're making mistakes. Regardless, you have no business going to live trading before you prove to yourself that you can make money. So the typical profile of a person who does this is a real estate investor who wants cash flow, who is between deals, unsure where to deploy money, which is a lot of us are in this mode right now, want diversification, or somebody near retirement. I have clients from 35 to 75. I have people who are 74 years old doing this. Okay, so this is just an example of the two machines that we know of. One is real estate, one is the stock market. The real estate, typical deal, $1 million, Fourplex. Down payment $200,000. I did the expenses, about $1,200 cash flow. That's generous, $300 cash flow per door, okay? And with $200,000, you can get $48,000, or about $4,000 a month. The cash on cash, again, I'm not doing ROI because I know there's mortgage pay down and appreciation, but this is cash on cash basis. This is 7%, this is 24%. So superior in terms of the cash ability of what it gives. These are some of my clients. These are the people who went through my mentorship program. Typical things like surgeon, executive, marketing executive, supply chain executive, business owner, a lot of real estate investors. You guys know Patrick Francie. He's a graduate from my program. You know Niran? Niran here. Raise your hand. You can go and ask him about that later. So anyway, lots of people from the community that see a lot of value in augmenting what they're doing with cash flow.
Okay, Bill, how are you?
I am wonderful. How about you?
I'm very, very good. You recently just graduated from the 12-week mentorship program. Overall, how are you doing? Are you doing any live trading right now?
Yes, actually, I started doing live trading with about 3 weeks before we ended the class.
You didn't tell me that. Okay, good. Okay, and just give us some of your progress. Like, so that was like you've been doing it for a month or so. So how much money did you were you able to make, or percent or something?
So far about $21,000 in the last
Okay.
3.5 weeks.
Do you feel confident? Like, what is your feelings right now?
Yeah, I would say I'm pretty confident. Yeah, actually, maybe more. Very confident.
Made about $21,000 in 3 weeks, but I'm telling you, it's not a get-rich-quick scheme. What does this mean if he made $21,000 in 3 weeks? What does it mean if it's not quick money? What does it mean? His capital was big, because it's still 2% a month. Okay, his capital was so big that he was able to do $21,000 in 3 weeks. Okay, so it depends on your capital. So very quick questions. Is it risky? If you don't know what you're doing, yes. I'm a real estate investor. How does this fit? It fits perfectly. Is this day trading? No, I hate day trading. It's a very sure way of losing money for a lot of people very quickly. How much capital do I need? You can start as low as 10K. How much time does it need? My program is 12 weeks and you only need 10 minutes. It's designed for busy people. Like, it's not that you will look at charts all day. What returns should I realistically aim for? 2% a month, 24% a year. That was a real example of what I showed you. What's the worst can happen? You will buy a good stock at a discounted price. That's the worst thing that can happen. So next Saturday, if you're around here, I have a masterclass. It's a 6-hour masterclass. It's only $22. And we're going to go through a lot of things. And if you cannot make this Saturday, because you're from out of town, I also do a lot of virtual ones. So everybody put their cell phone out. Take this. It's a 2-step process. The first step is to put your email and address. The second step is to pay the $22 if you're coming. So please all do the first step so that you get notified when I do virtual events. Okay? Usually it's free, the virtual events. If you're coming next Saturday, about 50% of the seats have been sold already. So that's for next Saturday, 10 to 4 at the Hilton Mississauga here. Okay, and then the last step is, this is my business card. Also scan it, please, and send me your information. And I have a booth there, booth 21. Come ask me questions, and let's talk a little bit more. It's a real opportunity. It's really good, and it's worth your you looking into. Thank you.
Awesome. Well done.
Beautiful. Thank you. Thank you.
Excellent work.